Hello and welcome, deep value seekers. Today we do a deep dive analysis into Micron Technology Inc., stock ticker MU. As of March 31, 2026, the current price stands at $337.84. Please remember that this video is for informational purposes only and is not financial advice. If high bandwidth memory demand continues to outpace supply, Micron could move beyond its typical cyclical behavior and act as a constrained supplier in a supercycle. Memory demand is rising quickly, yet Micron stock is still priced like a cyclical commodity chipmaker. Market anchored to past boom-bust cycles, underestimating structural shift toward high-margin HBM. Like we already said, if memory becomes structurally tighter plus AI-driven, earnings power could be materially higher than expected. Micron is a leading manufacturer of DRAM and NAND memory chips for various sectors, from data centers to consumer devices. Their customers include hyperscalers, AI data centers, and various OEM markets. Their revenue is increasingly driven by high-margin AI memory. The global semiconductor memory total addressable market, TAM, is experiencing a historic, AI-driven boom, with revenues projected to exceed $200 billion in 2026 and potentially continue growing in 2027. The company was founded in the USA in 1978. Breaking down revenue streams, the cloud memory segment is a core driver, showing 163% year-over-year growth. Core data center and mobile and client segments are also experiencing significant triple-digit growth, thanks to a margin-driven expansion. In our economic mode analysis, Micron scores highly across several key areas. The company has a 5 out of 5 for network effects and cost advantage, benefiting from industry leadership. Brand and intellectual property also score well, reinforcing its market position. Switching costs, 0/5. Moderate switching costs at the system level, qualification compatibility, but ultimately memory is a standardized component. Customers can multi-source across suppliers, limiting true lock-in. Network effects, 1/5. Minimal direct network effects. Value does not increase meaningfully with more users. This is a supply-driven, not platform-driven business. Brand, 3/5. Strong reputation for reliability and performance among enterprise and OEM customers, but purchasing decisions are primarily driven by price, performance, and supply availability rather than brand alone. Cost advantage, 4/5. Massive scale, advanced manufacturing and process expertise create significant cost advantages. High capital intensity and yield optimization separate leaders from smaller players. Regulation, IP, 4/5. Extremely high barriers to entry due to capital requirements, technical complexity, and IP. Building a competitive memory fab requires tens of billions in investment and years of expertise. Strategic angle, AI is structurally increasing demand for high bandwidth memory, HBM, a higher margin segment. Industry consolidation, Micron, Samsung, SK Hynix, creates more disciplined supply dynamics. CapEx-heavy model, but supply discipline can drive supercycle-like economics. For our DCF valuation, we used a conservative growth rate of 15% per annum, alongside a 15% discount rate and a 30% margin of safety, projecting over a 10-year horizon using trailing 12 months EPS. While analyst EPS projections currently imply extremely aggressive growth, approximately 100% plus annually, these estimates are heavily influenced by the early stages of the AI-driven cycle. Importantly, Micron has not yet returned to its prior peak earnings levels seen in 2018, a period that was itself driven by a demand surge, then crypto, now AI. This suggests that current earnings are still in a normalization and expansion phase rather than at peak levels. With AI-related demand driving tighter supply, improved pricing, and margin expansion, the setup shares similarities with past upcycles, but within a more consolidated industry structure. For this reason, a 15% growth assumption, slightly above historical averages, is viewed as reasonable, balancing structural tailwinds against the inherent cyclicality of the memory business. The DCF output reveals a fair value of $523.86, suggesting a 55.06% upside from the current price of $337.84. Even with a 30% margin of safety applied, the MOS price is $366.70. A reverse DCF shows the market is currently pricing in a long-term growth rate of 13.62% per year. This is below our conservative estimate of 15%, suggesting the stock is potentially undervalued based on our assumptions. Our final verdict is that Micron Technology Inc. is undervalued. The current price of $337.84 is significantly below the fair value estimate, with a large margin of safety. Micron is a historically cyclical memory business transitioning into an AI-driven, supply-constrained industry with structurally higher profitability. Follow for more deep value analysis, and remember to like, subscribe, and comment on your watch list. Please remember that this video is for informational and entertainment purposes only and is not financial advice. Investing involves risk, and you should always conduct your own due diligence before making any investment decisions.